Hi, everybody. We're here to see how the bloody market is doing. In fact, it's very green. So if you're in it, congratulations. You should always be invested in the market and have a little bit of cash on the side, of course. So today we're going to cover Tattoo Chef. We're going to cover Very Good Foods, and we're going to cover Enphase, which is my favorite stock by far. So let's get to it. And before I start, please hit the like and subscribe. We are going to have a special guest on Saturday that we're going to be chatting with, and we're going to put the video up next week. So we hope you join us because you're going to love it. Okay, on to the stocks. Okay, first up is Tattoo Chef. It's currently at 18 bucks, and it's a stable coin. You guys know that. I'm currently not in this play. I actually prefer Very Good Foods just because of a smaller market cap and possible more upside. But not to say that this won't do well. I think this will actually do well. Short interest right now is 34%. Market cap is 1.52 billion. So it's still a low cap company where I do see upside. But here is the problem with it before I get into the charts. If I just look at BYND right now, which is down, it's at $104. You think, oh, it's way more expensive. But look at the market cap of BYND. It has fallen. It's under $7 billion. So BYND is just a much more massive company. So any day of the week, I would rather pay $7 billion in market cap for this company, which also has a high short interest, 24%. But I would rather have this market leader because every time I go to the store, almost any store, there is BYND products. And I'm not saying Tattoo Chef is not filling up targets and doing all this other stuff. It just seems at this discounted valuation of BYND, and as it falls, I think I prefer this one. And I prefer Very Good Foods because it is a very tiny market cap and the upside is bigger if they have any sort of real success. Okay, we're going to get to Very Good Foods in a second. But this is a good company. And when I say good, I mean, obviously they're not profitable yet, but the revenues are growing. If we look at 2018 at 47 million that they made to a projected at 2021 right here of 184, look, they are growing. That's the point. So the 34% of people that are shorting the stock, it's kind of crazy. 1 out of every 3 shares is shorted, right? So obviously they're losing money. Anyone who thinks they're going bankrupt, once again, you have to always look at the balance sheet. Their cash and cash equivalents, cash equivalents are $140.2 million. If you look at their liabilities, we'll look at the long-term debt here for a second. Long-term debt is only 2.7 million. That's not a lot. And the total liabilities here at 49 million. So once again, 49 million total liabilities and total cash and cash equivalents of 140.2 million. They're not in real danger of going out of business anytime soon. So once again, I think these shorts are not paying attention to the fact that it is not a terrible company. Well, yes, it's not profitable yet, but it is not a terrible company to invest in and take a good bet on it. Once again, I'll be honest, I am not invested in this one. I'm invested in some other food place, which is BYND and Very Good Foods. I prefer those two. And if I had unlimited funds, I probably would buy this one, but I don't. Okay, the chart. So this is actually interesting because I do monitor these charts. And if you look at I'm going to look at, this is the weekly chart, by the way. So if you look at the RSI, and here I'm going to draw a line in the bottom here, that right now it is bouncing around the bottom of the RSI, which means, look, it's a little bit bearish right now. That's the point. And usually if you want to get into a position and you want to build it up, you want to buy it when other people are bearish because that's when you get the best deals, right? So this is an opportune moment. If I was trying to build a position, I wouldn't throw everything in. Don't get me wrong. But DCAing at this price of 18 bucks seems fairly reasonable and rational. And let's look at the trend of the chart. They are, look, it's on an uptrend. Once again, these lines could be arbitrary for some people. You guys might have your own lines. But if you look at the 2 big purple lines, it does look like it's moving up and to the right, but although be it slowly, it is moving there. It's seemingly over time. And what's interesting right now, if I zoom in, it is at the bottom of this trend line. So can it break it? Yeah, it's broken it before. And, once again, it depends how you do these trend lines. I try to count it from the actual candle body and not the wick. So I prefer to do this kind of thing. So I think it's sort of at the bottom of its trend line. And I don't know if there's any real reason for it to go much lower. It's also bouncing off. This is the 100-day right here. No, the 100-week, because I have the 20-week, the 50-week, and the blue line is the 100-week. Okay, over here, if you look at the daily, it is a lot more bearish, but it's still sort of in this trend. I'm going to go back to the weekly before I continue, but it is underneath the 200-day, which is always like not a great sign for a company. But that's also a good opportunity to buy the stock or DCA into a stock if you're interested. So once again, if I had extra income, I might throw a little bit into Tattooed Chef. But like I said, I have other plays, Zillow, Enphase, even Very Good Foods is it might be a better option. Okay, so this is the weekly chart again. The reason I want to show you this one more time is because it looks, at least to me, yeah, the orange line is the trend down here. This bottom purple line is the trend up, and it could be in this channel sort of going up. But it looks to me like it's going to bounce around here for a while, which means that if there's no reason for it to break out, unless the company comes out with some really good news, then we could see a breakout maybe somewhere around November, honestly, if there is a reason for the stock to break out. But if not, then I sort of see it just trading in this channel until it looks like February 2022, until the company and the fundamentals catch up and they give us a reason for the stock to go up. Can it break down? If there is any real bad news, then yeah, around this area, look, we can revisit back to maybe around 16 bucks where it seems to like to hold that price. So 16 is a possibility. Can it break lower? Of course it can, but I don't see it, at least at this point. The company is making more money. There are some positives. They're getting into more stores. So a lot of stuff is happening for them too. Okay, moving on to the Very Good Food Company. Current price is $2.72. Market cap is $227.34. And short interest, non-existent. That's because it's OTC. Otherwise, it'd be 30% shorted, guaranteed. So just remember, this stock can't be really shorted in the conventional way yet. I'm sure somebody has figured it out, but in the conventional way. So that's why you don't see any short interest. And when they get onto the NASDAQ, everyone thinks that they're just going to keep pumping. So right now, this is the news right now. Let me just cover that the Very Good Food Company is applying to get into the NASDAQ. They're not actually in yet. So this is important. Here's a couple of news items. The Very Good Food Company takes next steps towards NASDAQ and files F10 registration statement with the US SEC. Next piece of news that came out. And I think they're a little bit pumping the stock right now. This is them doing this on purpose because they want to keep their share price above a certain dollar amount. And $2 is sort of like, that's really low for them, right? The Very Good Food Company appoints CPG and food service industry leader to board of directors in advance of anticipated NASDAQ listings. So remember, they're announcing all of this stuff in order to prop up their stock price until, as they're applying for the NASDAQ, they don't want their stock to be tanking to $1. Like nobody wants that. Even I don't want that. I did want $1.55, so we'll see if that happens. And it still might, but we'll go to the chart and show you why it's looking a little bit more bullish now. Last bit of news, the Very Good Food Company addresses market rumors in advance of anticipated NASDAQ listing. This came out today. This is what I guess there's some rumors going on, which I wasn't even aware of, but a leading plant-based food technology company, which is Very Good Foods, today issued the following statement in response to market rumors, incorrectly stating that Very Good Food would need to do a share consolidation in order to meet the requirements of a listing onto the NASDAQ. While it is the company's practice to refrain from commenting on market rumors or speculation, we believe it is important to know that Very Good does not expect to complete a share consolidation in connection with anticipated NASDAQ listing. And I think what they mean by share consolidation is that if you're underneath a certain price on the NASDAQ, you get kicked out, you get booted. So if you have to be over a certain price, basically. And what they're saying is that maybe they have to make it so if you have, for example, they do a 2-to-1 consolidation. I think they're saying that, oh, maybe we have to do a 2-to-1 consolidation. So if you have 2 shares, you'll have 1 share. I think that's what they're talking about. So this was a rumor going around. I didn't hear about it, and they're responding to it. So they're saying they won't do that, hopefully. Okay. The chart. This is where it gets interesting, and I've been monitoring this, and I'll include some videos, some links down there, some links up here, all over the place. So you can check out some of these videos, but I thought it was going to break down on my trend line, and I guess I drew a pretty good trend line because it sort of held it, and then they came out with their news, which pumped the stock. This is a weekly chart, by the way, so I'm going to go to the daily. So this is the daily. But as soon as they come out with their news about the NASDAQ listing, it sort of started to break this downward trend. It's crossed the 21. It's crossed the 50-day. It's at the 100-day now. So we'll see if this holds. But remember, they're not actually listed on the NASDAQ. So all of this is, I would say it's a fluff piece until it's real. So am I buying this rally? Look, I was DCAing on the way down, so I didn't get my full position. I wanted to buy more, $1.55, $1.65, but I'm sort of happy where I am, and I'll wait. I think there's going to be a pullback. Not positive, but I think there'll be a pullback unless people are just so super bullish about it. But usually stocks pump and then they sort of return to reality. But the reality might be on top of the trend now and not below it. So we may never see 155 like I thought. We might just be at 225 or just following the trend down a little bit. So it's possible it comes down here. And look at the RSI, by the way. The RSI is almost at 70, which usually means oversold. So at some point, this rally will end. If you think it'll continue forever, you're wrong, especially in this sideways market. Like if we were back in 2020 in the middle of it, I would say this rally could continue to $20. Who knows? But it's not going to happen right now. This is not the market we're in. That low cap stocks are sort of getting crushed. And this can pump. This can go to $3. I have no idea. But I think there'll be some pullback. So if I was not in the stock, would I rush in? I don't know. It just went up 50%. So I might wait for a pullback anyway. But having said that, if you're buying it under $3 and you think it's going to $20, where we talked about, like in 2024, it might be at $23. So if that's the case, does $3 matter? Does $2 matter? It might not if you're willing to forget that the stock exists for the next 2 years. If you're not and you're watching it all the time and you're trying to always get a better price and do some trading, when a stock pumps 50%, I don't know if I would rush in. That's all I'm saying. Okay, the last company, which is my favorite, and I think everyone, not financial advice, of course, this is for entertainment purposes only, but Enphase is probably one of the most highest quality companies out there to invest in. And what's amazing, I don't think a lot of people, I know certain YouTubers have started picking this up, but especially big ones, like I think me, Kevin, is finally on the Enphase train, but I've been on this train for a long time. And this company still at this price and with this valuation. So let me go over that. $157 currently seems like an expensive stock. And I know a lot of people out there are like, I can't afford $157 stock. I know what you're thinking. Very Good Foods is $3 and this is $157. The point is a 2X is a 2X, 3X is a 3X, a 4X is a 4X. Okay. So if you bought one share of Enphase at $157 and you bought, hold on, let me just do a calculator again. And you took Very Good Foods and you did $157 divided by the $2.70 it's worth, and you bought 58 shares of Very Good Foods, it does not mean you are going to do better. Okay. You guys have to understand that it's important what the company is, the quality of the company, the amount of revenue they make, and also the market cap. So yes, that does matter. So if you take a look at the market cap, you're like, this is $20 billion. And if you look at Very Good Foods, it's 227 million. But let's not forget the business that Enphase is in. It's in the solar business. It's there to put literally microinverters and batteries in everyone's house on the planet. Okay. I'm not saying we all won't eat Beyond Meat type products and Very Good Food type products, but that's a different business and maybe harder because it's easier to get into it with a plant-based product. Enphase is in the engineering game. They're in the part of the business that somebody can't just ramp up in 6 months or a year or 2 years. This is a company that's been doing this for over a decade. So when you get a 2X on Enphase, it is no difference than your 2X on Very Good Foods. Having said that, I'm in both. So it's not like I'm choosing one or the other, but I definitely have chosen to buy way more Enphase than I have Very Good Foods. Way more. Let me put it this way. And it's just, I could sleep at night with Enphase. I don't have to worry about this company. This company will do fine. Okay. I could ignore it for the next decade and it will do fine. Very Good Foods has a lot of issues and it's not a profitable company. So you have to, when you're doing these calculations, hopefully you're writing actually spreadsheet stuff, but even in your head, you should look at the quality of the company. The speculative plays like Very Good Foods should be a smaller portion of your portfolio. And that's how you get better at investing. It takes time to learn some of this. It took me a lot of time, so I'm sure it'll take you some time. Before I go to the chart, let me cover this bit of news. Sunrun, Enphase shine with new buy ratings at BMO. And so Enphase is going to have a lot of buy ratings. And this is the thing, like no one thinks Enphase is going to fail. Okay. There is not one bearish person left to think Enphase is going to fail. They might think they're overvalued. They might think their stock price should go down to something more rational. That's true. But no one thinks that solar and Enphase is going to fail. And not to pick on Very Good Foods, which I do love, and I have their stock. I have a lot of shares too, but they could fail. they have a much better chance of failing than Enphase. That is why, even though it's cheaper and it's smaller market cap, I don't put a big portion of my portfolio, maybe 2%, 3%, 5%, even if you're feeling saucy. But to go 10, 20, 30, that's going to be my Enphase and Teslas. Okay, so back to Enphase. So there are lots of upgrades are happening for Enphase. They're also partnered with Sunrun, if people don't know. And if you don't know what Enphase does, I implore you to do some research. I have a lot of videos on Enphase, and maybe I linked them somewhere, but you should definitely do some research on Enphase. And okay, so off to the chart. This chart was spectacular for a long time, and I went over it many times, but since 2017, it's been going up and to the right. It's only recently it actually broke the trend because look, it got too hot. Does it mean it's going back to like $50? I don't think so. So I feel like Enphase right now is moving sideways. I don't see any real emergency. That's what I'm trying to say. I don't see any real emergency to throw everything into Enphase right now, but not to be buying any Enphase and dollar cost averaging. You know, I wouldn't agree with that. Let me put it this way. I would highly disagree with someone not buying Enphase right now because they're at the price where it's sort of like right in the middle. It's perfect between where I think they should be on the low, which is around, let's say $100, maybe $120, and the high, which was at $230. So they're right in that middle section where they might ride for a little bit. And in fact, I think they might ride this whole area until we get some real, until the fundamentals and the profits sort of catch a little bit up to the story that Enphase is selling. Until that catches up, which it is happening, it's actually happening. They are a profitable company. So we might have to wait until 2022, somewhere January, February, March, until it breaks out. That's actually my bear case. Like I'm giving you my bear case that we will have to wait till April 2022 to break out of this trend and go up. Because anyone who thinks they're going to break down and go like lower, I don't know. I think anything lower, let's say this happens and it goes lower to 118. I mean, I would sell almost all my speculative stuff to buy Enphase. That's how strongly I feel about this. So right now we're moving sideways, but still it's a good time to dollar cost average. And they are being upgraded. They are actually making money. Solar is a thing. They're putting batteries in people's houses. I mean, it just seems like this is a winner. So anyway, thanks for watching, guys. These were the 3 stocks I covered today, and hopefully you're interested in them. Leave us a note down in the comments. We're trying to hit 600 subs pretty soon. Please subscribe and let us know what you think. Thank you.